Dan Ives just yesterday said that Tesla will reach a $2 trillion market cap by the end of 2025. This would put Tesla stock at about $226 per share. Now, here in this video, I will explain what is likely going to happen to Tesla throughout the month of December, but also what could happen to Tesla during a correction in 2025. There's a more optimistic view of this. There's a more base case view of this, and there's a more of a worst case scenario. And we'll talk about that throughout this video. But honestly, Dan Ives could be undershooting this a little bit because the opportunity for Tesla is massive beyond most of Wall Street's comprehension skills. Now, just to put into perspective how massive just robotaxi's opportunity is for Tesla, by 2029, it's expected that Uber and Waymo will do 2.3 billion rides, okay, essentially. If Tesla can get a 50% market share of that, Tesla could be doing 1.15 billion rides in the robotaxi network. Keep in mind that just New York City had approximately 175 million taxi trips in 2014. So I'm sure that number's higher now, like, that's just one city. So compare the entire United States or China and Europe and all of that. It's crazy the opportunity that's out there here. But okay, great. Tesla could do 1.15 billion robotaxi rides per year by 2029. Times this by about $35. Say that's the average, taxi ticket cost, that's approximately what it is. I believe it's a little bit higher, but let's say it comes down a couple bucks. That is potentially $40.25 billion in revenue for Tesla. Assuming Tesla could have a margin on this, like a software company of, let's say, 75% or so, that could be $30.18 billion of profitability. Divide this by the current count of shares outstanding, which is 3.3 billion. That is $9.14 of EPS. Just from the robo-taxi business. That is over 3 times the EPS of last year, right? That's a massive number in the not so distant future. And that's why it's really, really hard to say Tesla can't go over this valuation or that valuation or the next guy's opinion valuation, right? Or what they think Tesla should be, because the opportunity is so massive. It's really hard to pin down what kind of numbers Tesla will be doing with a successful robotaxi network. Oh, and by the way, those are only numbers for the US, projected numbers, right? That's not including Europe or China or other parts of the world. So you could see just how crazy this opportunity could be. Now, it's actually surprising if you take a look at what Ryan Dietrich says here. I shared this in the last video, but December is normally a strong month, but it's normally the second half of December that is really strong. That is where we are about to enter into coming next week. And yes, we do have the Fed meeting on December 18th, but I think after you get the Fed out the way, you really don't have many risk catalysts left, and that in and of itself is positive, no matter if the Fed leans slightly on the hawkish side. Just considering how well Tesla has done in the first half of December, consider if the second half of December is, broadly speaking, a more bullish market. Tesla could seriously exceed higher from here. I mean, even if I want to be a contrarian right now, and I want to say everyone's bullish on Tesla, what are they missing? Why is everyone so bullish? Okay, clearly it's deregulation, it's lower interest rates, presumably strong economy, full self-driving coming next year with robotaxi, Cybertruck in China, lower priced Teslas, right? Not Lathrop, but the new Megapack factory was just completed. Like, there's a lot to be bullish on, and people are rightfully so bullish in my opinion. But if I wanted to try to come to a bear thesis, at least in December, there's not a single thing that I could say. Not one. I could say that maybe deliveries disappoint January 2nd when we get delivery numbers. That is the next big risk for Tesla's, rally. But based on the data we've seen so far, it looks like we're going to have a really good number and probably even exceed expectations there. So in December, I just can't think of anything besides something unforeseen, right? Like Black Swan-ish for Tesla that comes out. There's not a lot of, friction to drive Tesla lower. In fact, as I've said here on the channel for a while now, there's a lot of reasons for Tesla to have a really strong end to 2025, right? If you have a short position in Tesla, you probably don't want to take that over into next year because there's a lot of areas that you may not be able to tax loss harvest on in your portfolio. After the rise in small caps, after the rise of a lot of cyclicals and banks and big tech has done well, I mean, what are you going to tax loss harvest at this point? Yes, there is specific stocks that obviously have not done well, but some of that tax loss harvesting is likely going to be in short positions. So I don't think it's necessarily just Tesla that could benefit from a year-end short squeeze-like scenario. I think it's quite a few of names that, maybe people had short positions on. They're down on them. Could be Apple, right? It could be even Nvidia. It could be other names that people want to close out of heading into what everyone expects to be a very strong 2025. I just think Tesla is more vulnerable because of the rally that it's seen recently and the fact that, it's going to take literally almost like a black swan next year to not have a good year for Tesla. Like something would have to utterly and disastrously go wrong for Tesla to have a bad year next year. Do you really want to be short in that kind of setup? Probably not. And as I've mentioned in other videos now, we are not even seeing the short squeeze part yet. Yesterday, we did see about 1 million shares that were on net covered. So you did get a little bit of a preview of what a short squeeze could look like for Tesla. Tesla was up 6%. That is a drop in the bucket, though, compared to the total amount of short positions. What has really been driving Tesla higher recently, as you know, is a gamma squeeze. Now, with the gamma squeeze, you can get red days. Okay, like today, red days are good, right? To get a little bit of price discovery to the downside is actually a good thing as we are gearing up for what could be a short squeeze into year end. Once you start getting that short squeeze, I don't expect we will get many red days at all. It'll probably be just a few really big green days, like a couple 7 to 15% back-to-back green days to really wrap up 2025. That's my expectation. Now, as I've talked about on this channel as well, I do think we're going to get a Q1 correction. Now, if the bull case for 2024, the rest of this month plays out and you see kind of a market-wide melt up, market-wide short squeeze of exiting these short positions as we head into 2025, I do think it's going to mean a larger drawdown for equities. The fascinating thing about specifically Tesla is if Tesla has a good delivery number on January 2nd, you may actually see some crowding into Tesla as a bit of a safety trade, if you will, for 2025, because we are expecting Tesla's going to have such a good year. Maybe Tesla could actually do well or do okay during some kind of correctionary pullback in Q1. Now, on the opposite side, if that delivery number misses on January 2nd, and we also get some market weakness broadly in the markets, then obviously Tesla's not going to have a great January. I hope that happens. I would love to buy more Tesla. I don't think that is likely, though. And again, if you're looking at some indicators on our markets are really not euphoric at all. They're not overstretched. Yes, on a valuation basis, they're a little stretchy. That's because of big tech and how well big tech has done this year. But if you're looking at internals of our markets, it looks pretty good for that year-end rally. Percent of stocks above their 50-day moving average, 58.78%. That was actually down about 2% today. CNN's Fear and Greed Index is neutral at 51. This is typically not when you're, in a super optimistic market, right? You're typically not neutral. You're in greed or extreme greed. So I don't think things are overextended from both of those metrics. If you look at the AI Investor Sentiment Survey, 43.3% of investors are bullish. Historical average is 37.5%. So sure, are you a little bit higher based on historical averages? Yeah, but it's really not that bad. Now, what's actually fascinating about Tesla today is you did see some short sellers going out and taking out short positions on Tesla. It does look like you had 881,000 shares on net that were sold short today. So that means you had borrowed shares, 1.01 million, and return shares of 129,000. So you had 129,000 shares that were covered on, 1 million shares that were likely sold short today. I think when you're seeing that kind of activity before a squeeze, there's still some people that are a little reluctant with the rally we've seen in Tesla that want to try to hold out and push Tesla stock lower. But on a day like today, where PPI came in hot, yesterday's CPI came in hot, initial jobless claims came in well lower than expected. If a day like today didn't cause Tesla to have a really bad day, I don't see what else is going to between now and year end. We already know the Fed's going to be a little bit on the hawkish side. They're going to precondition the markets for a pause. We already know this. We know they're going to cut 25 basis points. That's not a secret. Like, what is Jerome Powell really going to say that's going to spook markets at this point? He would have to talk about raising rates again or something to, I think, be that big negative catalyst into year end. I do think from a pure just kind of statistical standpoint, you are much more likely to move higher into year end than to see some kind of big disaster between now and January. But I do expect a correction, and it's very much unknown how that will affect Tesla. If you see people crowd into Tesla because of Tesla's strength in December, or if you see people sell Tesla more because of that strength in December. It's really hard to tell, just theorizing of what a correction could look like. But unfortunately, we may not be going back to the low 300s for a while. Unless we get a true growth scare, recession scare, then, we could be, to use the Fed's language, higher for longer with Tesla stock. And just imagine if Tesla does hit $500 by the end of December, which at this point, $79 away, it's really not that unlikely. How much are we going to fall from there? A 20% drop would put you back to 400. You'd have to see a 35-40% fall to get back to 300. Those numbers, they just don't start to sound reasonable. Okay, so just some of my thoughts I did want to share with you guys. Let me know what you think about this information down below in the comment section. Tomorrow we have exports and import prices month over month and year over year. It does kind of affect GDP estimates. It's not a big deal. We do want to see if markets though recover a bit tomorrow. If we kind of shrug off the data that we got today and can end out the week on a positive note. There's this saying, down Friday, down Monday. If Friday's red, then Monday could be red. If Friday's green, that could lead to strength next week before the Fed on December 18th. So let me know what you guys think about this down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.